Let's get you updated on our grain trade as we get ever closer to the end of the trading month of November. Oh my gosh, we roll the calendar over to December next Monday. Wow. Okay, let's take a look at what's going on in the corn market. A lot of folks have been just truly amazed at what's going on in the corn and wheat markets today. December corn, 9 higher at 371 3/4, only one tick from our high of the day. All right, admittedly, that one is in delivery mode now today. It's first notice day on December contracts. And there were no deliveries, so that could be a factor here. Your lead month basically is now your March, and it's up 8 3/4 at 382. How about that on the high of the day? How about soybeans? Soybeans are going the other direction today. We are down 3 1/4 on January at 878 3/4. And then the gold star today by far goes to the Chicago wheat. Check out Chicago wheat today. It is up 21 3/4 on that December contract at 550 1/4. All right, that one's in delivery today. But the March, which is taking over basically as the lead month, it's up 17 3/4 at 544 1/2. And with that, I want to go to the phone and welcome Brian Hoops. He is with Midwest Market Solutions in Springfield, Missouri. I mean, wow, that's a big move. Now, it must be a fairly light trade. Is that part of the reason why it's such a big move, or is it justified?
Yeah, it's certainly holiday mode going on. And good morning, Marlon. Hope you had a great Thanksgiving. We're definitely seeing this holiday trade. With shortened hours today, just not much volume, not much participation from a lot of the traders out there. So it's pretty easy to move these markets in a large way. It doesn't take a lot of orders, and we're seeing a lot of technical buying coming into the wheat futures. Last week was a bullish outside weekly reversal for Chicago wheat. That lent to some buying interest this week from the technical community, and as we have reached some resistance points, we've exceeded them, and that ran into some buy stops. So a lot of it this time of year is more technical biased, as we don't have that news that we normally have through the holidays. The export sales out this morning were a decent number, but really not anything that is outstanding or would suggest that we're turning the trend back sharply higher to the wheat export community. It's more of a technical buying spree that's spilled over into the corn market. But you also had 0 deliveries against Chicago wheat and corn, and that has to be part of the reason why we're moving higher today.
Now, correct me if I'm wrong. I was checking out a Chicago wheat chart a little bit ago, and it seemed to be having what I would call a triangle formation. Some folks call it a wedge formation, where you have a downtrend line that comes to a point along with an uptrend line on the bottom. And when they keep getting closer and closer together, one way or the other, it's going to break out, and it definitely broke out to the upside today. Did that technically kick in a whole bunch of automated buying when that happened there?
Yeah, absolutely. You certainly did. We had that reversal that I talked about last week, and since that time frame, we've kind of been, moving higher each and every trading session. And once we took out the highs from a couple weeks ago, that was the next resistance point, that March contract, which is your front month, 539. Once we did that, it was a quick rally to this 17-cent gain that we're seeing now. This market here really has been following technical action, breaking some downtrend resistance lines, set the wheels in motion for a lot of this movement in here.
Real quickly, 10 seconds. Is corn following wheat, or is it trading on its own?
It's mostly a follower of the wheat. It would not be anywhere this strong here without the wheat market, but the lack of deliveries and decent exports are positive for the wheat, for the corn market.
I wondered about that. Okay, thanks for explaining that. We'll come back here in a moment. We're talking with Brian Hoops, and we'll sort out what's going on in our cattle and hog trade after this. We're talking with Brian Hoops of Midwest Market Solutions right now. He's in Springfield, Missouri, and I'm sure if you look not very far to the west, you're going to see some ominous wintry weather out there in the western part of Kansas. Is that helping to support this cattle market here today or not? Because it kind of sold off after the open.
Yeah, it's also the last day of the month here, so I think we're going to see a little positioning in the beef and the pork complex this week. It should be supportive. The weather should be a supportive feature. The cash trade that occurred on Wednesday is definitely supportive to the front month cattle contracts. But when you look at the end of the month coming in here, we should see cattle pull back, maybe on some profit taking, and the hogs be the opposite direction. They've been down most of this month. They should see some, short covering on profit taking, and that would lift those futures. And that's what we're seeing here on this holiday shortened trading day in a holiday shortened week. There's not been that much time to take those positions and take some of those profits. I think that's what we're seeing for the most part in the activity today.
Now, how are the funds lined up here on the cattle and hogs?
Well, they've been building some long positions in the cattle. They've been building short positions in the hog market. We're pulling back from our highs. The funds had really extended longs about a year ago, and they're pulling back. They're still holding a net long in hogs of about 8,000 contracts, but they're paring those positions down while they're rebuilding new long positions, almost 80,000 in the cattle. And a reminder, we will not have a commitment to traders report this afternoon due to the holiday.
Oh, now that's interesting. Will that have an impact, do you think, on Monday?
Maybe a small one. It's Monday afternoon when we'll have the next report, and then we'll have another one a week from today. So it probably won't have that much of a real impact, as these numbers will be as of Tuesday. So things getting kind of messed up because of the holidays, but the trend is there that the funds are building longs in the cattle and pairing those long positions in the hogs.
Brian, we got some new cutout values, the midday update from USDA. Yes, they are working today, and let's take a look. We had beef. Choice cuts were down 4 cents today. They were at $232.20 on the choice cut. Selects were down 61 cents on the midday update. Priced at $210.03, so a little bit of a weaker tone there. Meanwhile, on the pork side, carcass values were higher by $2.16 today at $82.14. Loins up $2.95. We had the ham market down 82 cents today. The belly market was $4.42 higher, still under $100, but it's quoted at $99.29 per hundredweight there. So it's still about $6 under where it was roughly about a week ago. So interesting developments there. Good to talk with you, Brian. Thanks for the help today. I appreciate it. Brian Hoops of Midwest Market Solutions, and he's in Springfield, Missouri. Lots of stuff going on today.
Absolutely.
All kinds of crazy market action.
Interesting. You wouldn't normally think it was going to be a busy day like
you
this.
get in the end of the month and you just never know. You just don't. Window dressing, they call it.
That's right. So you who tuned in, we appreciate you. It was not for naught. Thank you, Marlon. Appreciate that.